What's up everybody, Steve here. I just came across an article on Yahoo Finance. I'll put the link down below. And anyway, the headline caught my attention, so I figured I'd share it with you guys. The title is 50 Housing Markets That Are Turning Ugly. And anyway, it's a pretty good read, so let me just read part of it and we'll talk further about my opinion on everything as well. It goes on to say the U.S. housing market has been strong and home prices have been rising steadily since 2012. However, with the pandemic, housing boom, and low mortgage rates, signs of weaknesses can appear quickly, including a slowdown in buying if prices continue to rise in some places. That doesn't mean the housing market is headed for a crash, but some places could be more at risk for a downturn than others. To identify those places, Go Banking Rates evaluated 500 cities to identify which ones have high rates of foreclosure and underwater mortgages, which are houses that are worth less than what is owed, including any kind of closing costs associated with the property or the sale of the property. Go Banking Rates also looked at changes in median house listing prices, the number of days homes are on the market, and the percentage of for sale listings with price cuts, and compared those figures with national averages to see which housing markets were lagging behind the nation as a whole. Now, I did another video on how a hot housing market can hurt you guys, and you guys should take a look at that after you guys are done watching this video, because I kind of break it down showing you guys what just basically an average sale, if the prices do go down just a small amount and you had to sell the property including all closing costs, really what kind of position you'd be in. So I'll leave a link down below for you guys as well to check that out. Now, this article goes on to say, and look, I'm in Southwest Florida, so I take this pretty serious, and also having gone through the last real estate recession, this is interesting. So it says Florida has the highest number of cities with real estate markets that could be in trouble, followed by Illinois. Now, in the last real estate recession, Florida was one of the main states that, you know, we got hit hard. There's certain areas in Southwest Florida that they were actually calling Armageddon of real estate, that, you know, you just saw houses and upon houses of basically non-complete homes that were just shells, where builders and buyers just essentially walked away from these homes. So the list goes on to start with number 50 is Fort Myers, Florida. You know, I'm in Bonita Springs, Florida, but, you know, Fort Myers is literally right next door to us. And again, you know, during the last real estate recession, you know, Fort Myers, Lehigh, Cape Coral, a lot of areas in Southwest Florida were really affected by the last real estate recession. The next that goes on to say is Newport News, Virginia is number 49. Number 48 is Cumming, Georgia. 47, Toledo, Ohio. 46, Naperville, Illinois. 45, Sarasota, Florida. 44, Fort Lauderdale, Florida. Actually, I have a condo on the market for sale over there right now, just trying to broom that thing to free up capital for when I think things will decrease and distressed assets will come to the market. So I'm freeing up other real estate assets to ensure that I have the capital, more capital, to invest when I think things are going to go down, and I think that they absolutely will. 43, Menifee, California. Some of these are going to butcher the names because I've never even heard of. 42, Tuscaloosa, Alabama. It's actually where my brother lives. I'm trying to tell him to sell his primary residence right now because, you know, he's set to retire in like 2 or 3 years from the school district out there. And I'm like, dude, sell right now. You're at the height of the market. You might as well sell and then rent something for 2 or 3 years. And, you know, if you sell 2 or 3 years from now, you might lose out on $100,000, maybe $200,000 of equity. So I'm like, dude, sell. 41, Wilmington, Delaware. 40, Naples, Florida. Again, in Southwest Florida here. Naples, Florida has exploded. I mean, there's a lot of cash buyers that came to the market. They were buying, you know, multi-million-dollar properties, and it's astonishing how many people were paying cash for properties. But you know, this is not named in the top 50. So let's keep going down here. 39, West Palm Beach, Florida. 38, Waterbury, Connecticut. 37 Plainfield, Illinois. 36 Bakersfield, California. And I figure a lot more be in California too, interestingly enough, because the mass exodus with the amount of taxation and everything else going on in California. 35 Jacksonville, Florida. 34 Orlando, Florida. Orlando, it has been just every time I go through there, I'm astonished of how many new highways are being built in Orlando. So are they overbuilding there? Probably, but this definitely made the list. 33 McKinney, Texas. 32 Somerville, South Carolina. 31 Annapolis, Maryland. 30 Stamford, Connecticut. 29 Champaign, Illinois. 28 Port St. Lucie, Florida. 27 Bradenton, Florida. That's just north of us. 26 Ocala, Florida. 25 Dayton, Ohio. I've been there. That's just a small city in Ohio. 24 Lehigh Acres, Florida. That was Armageddon when shit hit the fan in the last real estate recession. Lehigh Acres was it. It was like a ghost town almost. It was just kind of disturbing to go through that town. There were literally people stealing air conditioning units. They were stealing any kind of copper piping from older homes. There was a lot of theft going on, a lot of squatting going on, a lot of just mayhem going on out there in Lehigh Acres. So I'm surprised that's not like number one of the list. 23 Rockford, Illinois. 22 Mobile, Alabama. Mobile, Alabama. 21 Cape Coral, Florida. Again, Southwest Florida. That was another area where you had a lot of unfinished built homes. You just drive around and you just see shell after shell after shell with grass growing over, nature kind of taking over these properties. Number 20 Fort Pierce, Florida. Number 19 Suffolk, Virginia. 18 Laurel, Maryland. 17 Joliet, Illinois. 16 Valdosta, Georgia. 15 Decatur, Illinois. 14 Elgin, Illinois. Number 13 Riverview, Florida. I don't even know where that's at, but it's Florida. 12 Atlanta. 11 Lawton, Oklahoma. 10 Hampton, Virginia. 9 Aurora, Illinois. Number 8 Bridgeport, Connecticut. 7 Norfolk, Virginia. 6 Miami Beach, Florida. 5 Baltimore. 4 Columbus, Georgia. 3 Portsmouth, Virginia. 2 Lakewood, New Jersey. Number 1 Peoria, Illinois. And I'll just read this one. Peoria, Illinois, 1 in every 932 homes is foreclosed on, or I guess going through the foreclosure. Percentage of underwater mortgages, 21%. 2-year price change, negative 16%. Median list price, $125,000. They claim the number 1 spot among cities with real estate markets that are turning ugly for several reasons. The city in central Illinois has seen the biggest drop in home prices over the past 2 years of any city on this list. The average number of days houses are on the market and percentage of homes for sale with price cuts are higher than the national averages. The percentage of underwater mortgages here is more than double the percentage nationwide, and the foreclosure rate is among the highest on the list. So basically, in this article, I'll leave in the description, but you'll be able to read every single. So if your town is on here, take a look at it. It'll break down every town. But basically, they this Go Banking rates. They have some sort of algorithm that kind of probably spits this out to give us a indication of maybe what's to come for who's going to be hardest hit in the future. If you guys are buying a home right now in today's market, make sure that you guys are not going to be house poor. If you're going to be buying a house, be sure it's a safe 30-year fixed mortgage and that you intend on being there for a while. Because if you do have to sell the property in 2 or 3 years and the market adjusts or flattens out, you might be upside down depending on how much money you put down And be sure to check out that next video in terms of how a hot housing market can affect you if you guys do have to sell if the market flattens out or goes down just a little bit. I appreciate you guys being with me today. Thanks a lot.